Hello, everybody. Welcome back to another episode with myself. Again, my name is Antonio, and today we will be having a brief discussion in regards to fundamental analysis and the economic calendar, and of course, how the trader can use the economic calendar to their advantage in order to understand what's going on around the markets and around the world geopolitically. Now, every single country has announcements that they come out with, some on a weekly basis, some on a bi-weekly basis, some only once a month. There's a variety of different events, and I will explain a few, again, on all countries across the world, but we tend to focus on main markets and main countries that markets more than others. So market, the Chinese market, the Japanese market, Australian market, the UK market, the French, the German, the Italian. These are the main movers of the global economy, as it were. And depending on what announcements they have and what announcements come out, all from official government bodies, of course, they have an immediate effect for the short term, always on the markets. Some creates a lot of volatility, some create less, depending, of course, on the announcement. Now, economic calendars can be found on all major investment sites, whether that's investing.com, FX Street, Bloomberg, Yahoo Finance. All major investment and financial sites do have the economic calendar. Most of the times, personally, I tend to use the investing.com calendar, as I find that it has all the events from the least impactful to the most impactful, and they're quite fast when the results come out. So I find that is a good tool to use. Now, how does one use the economic calendar to their advantage? So a very plain or a suggestion that could help someone strategize themselves and put themselves in a kind of trading schedule, as it were, is what I personally do. And that is that every Friday, I open the economic calendar for the next week, the next following week. So I have a view of all the next events coming from Monday to Friday next. Then through the filter, again, all sites have these filters. I'm using specifically investing.com economic calendar. From the filter, I select all countries and I select on the 3-star events. That means that the 3-star events are expected to create major volatility in the market. And of course, that is beneficial to the trader because volatility means opportunities. Opportunities to trade means potential profits. So let's talk about today, Wednesday, June 8th. We've had so far this morning 3 major events that have come out. The first one was from Japan, very early in the morning at 10 to 1 GMT, and it was the GDP for Japan for the first quarter of the year. The GDP is the gross domestic product, which basically measures the difference in imports and exports of a country, and it shows how healthy, booming, or slumping their economy may be. Now, the way that the economic calendar always works is that you have a forecast. A forecast is the expectation of the figure depending on the analysts throughout the whole world, major banks, and the governmental bodies themselves, what they're expecting. That's the forecast. So the forecast for today's GDP from Japan was at negative 0.3%. Now, as soon as the announcement came out, you had to be ready to trade. The announcement came out at negative 0.1%. That is more positive than the forecast was. As a result, the fact that it was positive is a healthy sign for the Japanese economy. And as a result, As soon as the announcement came out, for a short period of time, to 5-10 minutes, we saw a rise in the Japanese yen. So a trader would choose what assets they wish to trade on. That could be USD JPY. It could be CAD JPY. So the Canadian and US dollar against the Japanese yen. Could be the euro against the yen as well. So let's say, for example, in all three examples that I just said, USD JPY, CAD JPY, and Euro JPY, we have the JPY being the second currency. So that means that if it was positive for the Japanese yen and we were expecting the Japanese yen to rise, then we would open a sell position on the three aforementioned assets. Why? Because as the yen rises, its counterpart, which is the USD, the CAD, or the euro, goes the other way. So a trader would be looking at their economic calendar. As soon as the announcement came out and they saw that it was positive, they would sell. Within the first 3 to 5-10 minutes, they would generate a potential profit, and that's when you leave the market. Thank you for my profit. See you next event again. Okay? Keep in mind that how much you can make all depends on your account type, your account level. So someone that's got 10,000 in their accounts and exposes 2,000 to trade on the event, they're going to make more potential profit than someone that has only 500 in their account. That's just mathematics, and that's just common sense. More money makes more money. Okay? Obviously, being safe, it is the kind of events that help you because they give you the direction. So you know from a governmental body whether it's positive or negative. So that was the first opportunity that a trader could take advantage of today. Then at 5:30 a.m. GMT, obviously, we're a global company, so people in Australia and in Asia could trade these events more freely than someone in Europe, okay? And vice versa for the European and American events for someone in Asia. That's just time differences. So at 5:30 a.m. GMT this morning, we had the interest rate decision by the Bank of India, okay? No major changes there. They expected to keep it at 4.80%, and they rose it for 0.10% to 4.90%. So that means that they're giving higher interest rates to banks in order to be able to give out more loans and so on and so forth. So again, that is a healthy sign for the Indian economy, and the Indian rupee had some volatility and some movement when that announcement came out, which traders, of course, could take advantage of. Now, at 9:30 this morning, which we were all up and working, we had an announcement from the UK, which was known as the Construction PMI, the Construction Price Manufacturing Index. Basically, this gives you an understanding of how many construction items are being sold and being used overall in the economy. So if this is a higher amount, then you're expecting more building to be going on, and vice versa. The forecast for this specific event this morning was at 56.6. The actual announcement that came out, though, was 56.4. So as a result, this was considered to be negative, and we saw a very small but sharp drop in the British pound. So British pound against the yen, you would sell. Target to make a potential profit and get out. CAD JPY, Euro GBP, the euro against the pound, you would buy that as you would expect the euro to rise against the pound on that specific event. So these are three events that happened today already, and what happened and how clients took advantage of that and traders targeted to make a potential profit off of that. Now let's talk about an upcoming event later on this afternoon at 3:30 GMT, 5:30 Cyprus time. This is an event that comes out every single week on Wednesday, and it is the crude oil inventories. It is one of the biggest events that come out every single week. As I'm sure you know, oil makes the world go round, not just money. And obviously, depending on what the announcement is, it has an immediate effect on the markets in regards to oil. So what is the actual announcement? crude oil inventories is basically a figure that comes out from the governmental body in the US and tells us how many millions of barrels of oil the US has in stockpiles, in its inventory. And of course, like before, it's positive or negative. So the forecast for today is at minus 1.917 million barrels. If the announcement comes out and it's positive, so it's closer to zero, then that would be positive. That means that they've used more oil. They don't have as many barrels of oil in their inventory. And then we go to classic demand and supply, right? Which means there's less there's less supply to meet the demand. Okay, as a result, the price is expected to go up. And vice versa, if it is more negative than 1.917 million minus, then you're looking at means that they're using less. They have more inventories, so there's more supply to meet the demand, and you would expect a drop in the price. Of course, keep in mind that geopolitical events like the war between Russia and Ukraine, which is still ongoing, the production of Saudi Arabia on oil does come into play as well right now as these things are going. But 90% of the times when it's just the announcement coming out, it has an effect immediately on oil. So a trader would either buy or sell crude oil or Brent oil depending on the announcement as soon as it comes out. Now, for the rest of the week, for tomorrow and for Friday, there are a few major events. For example, tomorrow at 12:45 GMT, we do have the ECB, the European Central Bank's monetary policy statement, along with their interest rate decision. It is expected to stay the same. However, of course, you never know what could happen, what they could decide, because as they're discussing about it, it creates a lot of volatility in the euro and the eurozone. So that is something that traders will be able to take advantage of. Then later on in the afternoon tomorrow at 1:30 GMT, we have another major event that comes out once a week out of the US from the Department of Labor, and it is the initial jobless claims. And basically, this is an announcement that measures how many people have made a claim for unemployment over the last week in the US. And again, of course, if it's less than expected, the forecast is 210,000. So if less than 210,000 people have made a claim for unemployment benefit over the last week, that is a healthy sign for the economy. That means that more people actually have jobs and not claiming jobless benefits. If it's more than 210,000, then that's negative, and we would expect to see a drop in the US dollar. And of course, Friday, we've got the interest rate decision from Russia, which is expected to drop even more, as they did drop last time as well, from 14 to 10%. Obviously, the fact that they're in a war right now, it does make sense for them to drop their interest rates in order to get a bit more cash flow in the country, as it were. So that is an opportunity for someone to trade on. And then closing out Friday with the core CPI in the US, which again basically gives a sign of the economy, how it's performing at its core. And of course, the last one for Friday at the same time is the Canadian employment change, which is the same as the initial jobless claims, but it affects the Canadian dollar. Okay. Now, when all of these events come out, most of them affect the dollar or a local currency. So when a German event comes out, it affects the euro and the German DAX. However, across the board, no matter what country it comes out from, it always affects the dollar as well, because that currency will always be affected with the dollar. So if it's a European event, Euro USD will have the most volatility. If it is a Japanese event, USD JPY would have the most volatility, and so on and so forth. As a result, most traders tend to focus on trading on the dollar and correlated assets, because the dollar is king. It is, the most capped currency in the world. So as a result, it always has correlated assets. So when the dollar goes up, certain assets go the other way, such as the euro, the yen, gold, and oil, to name a few, and vice versa. When the dollar drops, these tend to rise. So there's always an opportunity for the short term. And why am I talking about the economic calendar? Because most clients, most traders are busy. They work. They've either got a 9 to 5, they've got their own businesses, and so on and so forth. They don't have all the time in the world to just sit in front of a screen, do analysis, both technical and fundamental, and decide what to trade on. Otherwise, they would be professional traders, and that would be their job. But for the average Joe, the normal person that wants to take advantage of the markets, because as I've said before, the financial industry moves over $6 trillion a day. So there's a lot of money that goes around and can be going around if things are done correctly. So again, why am I speaking about the economic calendar? Because for people that they don't have a lot of time, they don't have millions and millions to invest, but they do understand the opportunities in the market, and they can find themselves 5-10 minutes free, whether it's on their phone or on a computer, to take advantage of an opportunity, which is why, again, I said I like to do this on a Friday eve. So on a Friday eve, I have a look at what the events are for the next week. So I know, okay, I can't take advantage of, let's say, for example, the initial jobless claims tomorrow at 1:30 GMT because I have a meeting. But I will be able to take advantage of the crude oil inventories later on in the day. Or I can't take advantage of the crude oil inventories later in the day, but I can't take advantage of the Russian interest rate decision very early tomorrow morning before I go to work. So that's the beautiful thing about looking at the economic calendar in advance. So you can actually put down in your agenda and your calendar those 5-10 minutes free that you have to take advantage of these major events, because they're very good for the short term and they can benefit you when things are done correctly. Obviously, you do need to understand how it works to be able to understand as soon as the announcement comes out how to go and apply it, which is why we're here. So please do get in touch with us. We'd love to teach you how the economic calendar works, how trading on fundamental analysis works, and how you can potentially get in and out of a position in order to target, of course, a profitable situation while keeping the risk at a minimum. As always, we would love to answer those questions and help you out. You can get in touch with our support department, and your dedicated account manager will give you a call to help you out. So that's it today for the economic calendar. Again, you can find it on various websites. Personally, I use investing.com. It is amazing to know what's going on around the markets and what events can affect at that point for the short term and sometimes for the medium term as well. In order for you to not waste too much time, get in, get out, enjoy yourself a potential profit. Thank you again. See you next event. Keep in mind, there's about 85 major events across the board in all countries every single month. So out of 85 events, I'm sure you can figure out to trade a few if it's going to benefit your account. The more you trade, the more opportunity you give yourself as well. So keep that in mind. Once again, thank you and see you next time. Bye-bye.
Hello, everyone. My name is Emily. Thank you so much for joining us, and welcome to another walkthrough of our website. Today, I want us to go through the IronFX school option, which I truly believe that it will be very helpful for all of you. Excuse me. Thank you very much. So, as you can see here, this is our home page, and here we have the option of IronFX school. As you see, we have loads of different options right here. First, I want us to go through our newest additions, which is webinars and podcasts. So as you can see here, we have the live forex webinars, and it's free. You're not going to pay anything. And if you scroll down, you'll be able to see which webinar is best for you. So first we have the beginner, intermediate trader, expert trader, and also if you want, you can watch them all. Here you can find all of the available webinars. You can choose the language that you want them, English, Spanish, Portuguese. Then we scroll down to our educators. And it is very, very easy for you to sign up for a webinar. You just have to click on register. You just put your details and you are ready to go. Then we move on to podcasts. Here you can see that these podcasts are very educational for all of our clients. They're made from our education and research team. If you click on more here, you can see the available platforms for the podcast. You have Spotify, Amazon Music, Deezer, Google Podcast, Podcast Addict, and RSS feed. And also, if you want, you can watch our previous episodes where you can find right here. Moving on, we go to the economic calendar. So you see here that it's real-time financial events and indicators. For you who you don't know what is an economic calendar, you have the explanation right here. You also have the explanation of what are economic indicators. And scrolling down, you'll see the timetable. You have the events. You have today, tomorrow, this week, and next week. Basically, you have all of the information right here. Also, you have the top 8 economic indicators for forex trading. First, we have the gross domestic product, then the non-farm payroll, NFP, unemployment rate, inflation, consumer confidence, central banks, retail sales, industrial production index, and that's it when it comes to the economic calendar. Moving on, we have the financial news. So here you can find an insight of the financial news. You can stay updated when it comes to the latest forex trading news and also expert technical analysis. You can see here, you just click on read more. Also here you have an explanation of what is technical analysis for you that you don't know and that you're new to this. So as you can see here, technical analysis is based on 3 general underlying assumptions. You have the market discounts everything, price moves in trends, and history tends to repeat itself. Then you see the option right here, which is technical analysis in online trading. You scroll down. And also here you see our research team. Moving on, we are going to forex trading strategy. So here again, you have an explanation of what is a forex strategy. You have the basics over here. You have the thoughts on forex strategies. And then here you have steps to a successful forex trading strategy. You have choose a market, set a time frame, identify risks, improve your trading strategy. Then we go on to what is forex. As I said, I truly believe that a broker should have this option for their clients, even if you have experience, even if you don't have any experience, because at the end of the day, knowledge is power. And we truly believe that we need to invest into the education of our clients. We need to provide to our clients something more than a platform and a customer support, because every broker has that at the end of the day. So I truly believe that having the IronFX school will help and is already helping a lot of our clients. So here you see what is forex. Here you have a full explanation of what is forex, how does forex trading work, the forex market. You have the buy and sell currencies. Why trade forex with IronFX? The benefits of forex trading. Here you have the round clock trading, leverage, currency pairs, and low costs. Then we move on to the trading for newbies. So this is for our new clients, for you that you don't have any experience. But as I already said, it doesn't matter if you don't have any experience. This could even help experienced traders. So I would suggest you giving a look at it, because you could learn something that you don't know, or something that you thought you already knew. So here we have learn how to start trading forex as a beginner with IronFX. Then we move on to start trading forex in 5 easy steps. So first we have select the currency pair. Then we have develop a strategy. You need a strategy when it comes to trading. You just can't go with blind eyes when it comes to trading. Then you will learn how to analyze the market. Then we have the buy or sell, the orders, and that's it when it comes to it. But as I said, when you start looking at the website, you'll get a better understanding, and also you will have your own dedicated account manager that even if you read something on the website and you still don't understand what you're seeing on what you're reading, you'll be able to communicate with them and they'll be able to guide you through the experience. Then we move on to trading for professionals. Learn all about trading as a professional with IronFX. Here you see what it takes to be a professional trader, basics of trading, more advanced basics, benefits of educational trading for professionals with IronFX. And that's it when it comes to our professionals. Then we move on to trading videos. These are extremely helpful. So here you have educational and informative videos for trading. You have market outlook, looking at the charts, IronFX minute, week ahead, daily key points, and how-to videos. I would say if you are a beginner, start with the how-to videos. They're extremely helpful. And then you just navigate through here between the pages. Moving on, we have the glossary. So basically here, what you can do is that you can select a letter from the alphabet. Like let's go with B, for example. And here you have keywords when it comes to trading, like bear, a trader who believes that the price of an asset will fall. Then let's choose T. Then you have here the tick, is a measure of the minimum upward or downward movement in the price of a security. You can choose whichever you want. This is extremely helpful. This will help you a lot. I know it sounds like preschool, but at the end of the day, when you don't know something, you need to start from the beginning. You need to take baby steps in order to achieve something. And this is the best way for doing it at the end of the day. So we move on to the last option, which is introduction to forex. So this one is the best option for experienced and unexperienced traders. Here you have every explanation of what means forex, of what is a forex market. And then you see here what is forex. Here you have the explanation of what forex means. Then you see over here who trades forex, because I'm sure that most of you who don't have any experience, you didn't know, for example, that banks are also trading. So you see here governments and central banks, banks and other financial institutions, corporations, investors, speculators, and tourists. Because even if you go to a different country, when you are changing the currency from example, from Europe to the British pound, you're still trading. It's a trade you're doing. Then you have here currencies. So you see here the currency of the US is the US dollar. In Eurozone, we have the euro, which is shared among 19 of the 28 EU member states. The UK has the pound, and Japan, the yen, and etc. The International Organization for Standardization, has determined standard abbreviations for currencies. So how are currencies traded? You see here everything that you need to know. And also something extremely cool that IronFX has, and it will help a lot of you, I'm sure. And it's very fun. So you click here on download the full ebook. So we do have an ebook, and it's free of charge. You're not going to pay for anything. So here you have Introduction to Forex. Approximately, I think you just need around 30 to 40 minutes if you're gonna read it carefully. If you have experience, you'll need most probably like 10 minutes to read it. So the first page here, we see what is Forex. Then we move on to who trades Forex again. You have basically everything that the website has and a little bit more. It's with more explanation. It's with more detail for you to understand. For example, here you have the currency pairs. You have the major currency pairs. You have the cross-currency pairs or minor currency pairs. And you have the exotic currency pairs. Then again, here we have the trading Forex, the evolution of Forex trading. We move on to retail Forex trading. And then we have what are CFDs. CFDs is contract for difference. So basically, you see the explanation of it. This is very important. I do believe that you should pay attention to it. Let's read it together. So a contract for difference, CFD, is a financial instrument that allows market participants to invest in an asset without actually owning the asset. So, for example, if you are investing on oil, you're not actually buying the oil. You're speculating on the price of the oil. So CFDs are derivatives that allow traders to take advantages, both prices going up and prices moving down on underlying financial instruments, and are often used to speculate in those markets. The CFD is a contract between two parties, the investor, which is you, buyer of the contract, and the broker, which in this case is IronFX, seller of the contract. It states that the seller will pay the buyer the difference between the current value of the underlying asset and its value at contract time, which means closing of the position. If the difference is negative, the buyer pays the seller. It's extremely simple. And here you have margin and leverage. Moving on to the trading sizes. You have the mini lot and micro lot. You have the pip and the pip value. What is a pip? A pip is the smallest amount of change in a currency pair. For currency pairs displayed in 4 decimal places, a pip equals a change of 0.001 yen. Crosses are displayed in only 2 decimal places, and 1 pip in these crosses equals 0.01. Then you have the fractional pip, for example. Moving on, we have the types of orders. You have the market order. What is a market order? Let's read it together. It is an order to buy or sell immediately at the current market price. You push a button and you enter a short or a long position immediately. Exiting the position with the button push at current price is also a market order. So here you have the pending orders to enter. You have buy stop, sell, buy limit, and sell limit. Then you have the types of orders. So you have the stop loss, take profit, trailing stop. Here you have bid, ask, and spread. Again, extremely important if you are a new trader. You should pay attention to this here. You have the swap. Here you have more key definitions, which is very helpful again. You have a couple of indicators to watch. And this one over here, high risk trading warning. So this is extremely important if you don't have any experience, if you don't know that there is always risk involved when it comes to trading. So you need to read the disclaimer. And as you see here, our services include products that are traded on margin and carry a risk of losing all your initial deposit. Before deciding on trading on margin products, you should consider your investment objectives, risk tolerance, and your level of experience on these products. As I said again, you're not going to be alone when it comes to this. One of our dedicated account managers will contact you and they will go through with you everything that has to do with trading. So you shouldn't panic. Even if you don't have experience, you should give it a try. It's something that will for sure open your eyes when it comes to the market. And who knows, maybe you will be successful. You'll never know. So that's it for today, guys. Thank you so much for joining me once again. If you have any questions or if you feel that the IronFX school is not enough, as I said last time, you can always contact our support team by emailing us, or you can just click over here, and this is our live chat support, which is extremely helpful. And that's it for today, guys. Thank you so much once again, and I'll see you very, very soon. Have a good one.
Today we will look at the FX market, provide a definition, and discuss the times you could trade forex. So what is the FX market? FX or forex is an acronym and it stands for foreign exchange. The FX market is a market where you can trade, or if you prefer, exchange currencies. It is an over-the-counter market and it's a decentralized market with no actual physical central exchange. Thus, it is an over-the-counter market. It's open 24 hours a day, 5 days a week, and closes on weekends from midnight Friday until Sunday at midnight. The typical forex day is being split into 3 main sessions. We make a start with the Asian session, which starts around midnight GMT +2, with the Sydney and Tokyo being open. This carries us through until the European session, which begins at around 9 o'clock in the morning, when Frankfurt and a bit later London open. Later on, the American session begins as the New York Stock Exchange opens, which carries us through until midnight, when the next Asian session is to start. It's the world's biggest market, and it's characteristic that in the past years the FX market has a daily turnover of around 6.6 trillion US dollars. Imagine what trading opportunities occur when the $6.6 trillion exchange hands each day. So who actually participates in the FX market and is able to create such a huge daily turnover volume? Well, the first category includes governments and central banks. National governments and central banks interfere in the FX market either to strengthen or to weaken their currency by buying it or selling it respectively and to readjust their foreign exchange reserves. The second category includes commercial banks and other financial institutions which attend to foreign exchange needs for their customers. For example, for imports and exports and for small-scale transactions with other banks. The third category includes companies repatriating profits. Say, for example, Toyota has a factory in the UK and at the end of the year it wants to repatriate the profits of the year back to the mother company in Japan. It will have to go through the FX market to be able to convert the gains made in pounds to Japanese yens in order to send back home. The fourth category is investors buying assets in foreign countries. For instance, if a European investor wants to invest in a US stock exchange, he or she will have to change his euros into US dollars to be able to invest in anything in the US. The fifth category is speculators. Please note that speculation is the practice of engaging in risky financial transactions in order to profit from short-term fluctuations in the market value of a tradable financial instrument. Last but not least, tourists and travelers. On an individual basis, tourists do not have the same impact on the market, but at certain points, time-specific tendencies in the tourism industry could overspill in the FX market. Say, for example, in the summer months, if UK citizens want to spend their vacation in Southern Europe in countries like Portugal, Spain, south of France, Italy, Greece, Cyprus and Malta, they will have to exchange their UK pounds into euros in order to spend during their vacation. So this should be taken into account since there are millions of tourists. We hope that we were able to portray some of the key categories, albeit we're certain that more exist.
Hello, everyone. My name is Savas.
Hi guys.
This is Odysseas. Today we're going to talk about live floating and live fixed spreads. So, Odysseas, how many live floating accounts are there?
So basically we have 4 live floating accounts. As you guys can see on your screen, we got the standard account, the premium account, the VIP account, and the live zero fixed spread account. So we've got these 4 accounts.
All right, 4 accounts. That's nice. Can you analyze the accounts for us?
Yeah, sure, of course. So let's start with the standard basic account. So we have, as you guys see, we have the ability to trade on CFD instruments, which is forex, metals, indices, commodities, futures, and shares.
Mm-hmm.
Right? We got the minimum lot size, which is 0.01. Yes. We have the basic currency, which it can be US dollar, can be euro, GBP, AUD, JPY, of course, BTC,
Bitcoin,
yep,
nice. That's good.
PLN, and the CZK. Now, we got the spread, which is a floating from 1.8 fixed to a 2.2. And, of course, the commission, which is like commission.
Oh, that's great.
Yep. The flexible leverage can go up to 1,000. And the stop out, it's up to 20%. Now, for the Islamic accounts, which is an option for
So
people,
we do, yeah, all right.
of course, yeah. We have the swap-free accounts, and a dedicated account manager, of course, which is for all the accounts,
So whenever someone needs, they have their own account manager, basically.
24/7. Now, we've got the dealing department, which is transactions. It's like a hotline. Of course, you've got them there anytime for your service. And this is basically the standard live floating account. To go on with, we have the premium account, which is basically kind of like similar with the standard account. The difference on the premium account is, as you see, it's the spread.
Mhm.
It's floating from 1.6 fixed to 1.8,
All
right?
Sure.
And the rest you have the same as the standard account, the commission, the leverage, and your stop out. Now we have the third account, which is the VAP account.
Mm.
Now on the VAP account, the difference is starting from the base currency. Now you can use only US dollar, right?
All right.
And the spread, it's floating from 1.4 fixed to 1.6. We're talking about a huge difference from the standard
That's
account,
great,
of course.
yeah.
Yeah. And the rest, as you guys can see, basically the same as the standard and the premium account. And
So the only difference is basically the currency.
Yeah.
And the whole point is the spread, actually.
exactly.
Yeah, that's great.
Yeah. That's what clients focus on about, basically, on the spread, which is quite a big difference, floating from
Yeah,
1.4 to 1.6. And finally, we've got the fourth account, which is basically the live zero fixed spread account. Now, on this account, you guys can see there's a lot of differences compared to the other three accounts. Now, you have CFD instruments to trade with, which is forex, metals, indices, and commodities. That's it.
That's it.
Now, your minimum lot size, as you can see, it's the same. It's 0.01.
Yep.
And the base currency is US dollar and the euro, right? So
Alright.
you have one more option here. And where the huge difference comes is on the spread, which, as everyone can see, it's fixed to zero.
That's amazing.
Yeah, it is. It is. Now there is, of course, a commission coming. Now that's a basic standard commission coming from the company. That will be something to talk about with your senior account manager, of course, once you get started with your account.
All right.
Yeah. And you've got the flexibility to have a leverage up to 500, which is also different from the other three
Previous
accounts.
accounts.
Yeah, the previous accounts are up to 1,000. This is up to 500, right?
But still, you have zero spread, so it's still amazing.
Exactly. And you see your stop out, it hits at 50%, right?
Instead of 20. Yeah.
Yeah. So basically, this account, it's usually coming for experienced traders. Yeah. And the rest, as you guys can see, you can always have this account if it's even an Islamic account, if that's an option. You have your account manager there 24/7, of course. And
Which is very important.
yeah, and the dealing transaction.
department.
Yeah. So this is basically the four accounts that the company IronFX provides as the live floating and live fixed spread accounts.
They're actually amazing, especially the one I would prefer was either the VIP or the live zero fixed spread. Obviously,
I know.
Alright.
For obvious reasons,
Yeah.
right? I know.
Alright.
So guys, this is the live floating and the live fixed spread accounts. It was a pleasure being here with you guys again. Now, of course, it was a pleasure having Savas with me today. For the next week, we guys are going to be analyzing and talking about the STP and the ECN accounts. So we can break it down for you again with a little bit more information, just like today.
All right. Thank you very much, Odysseus.
Thank you so much, Salas. It was a pleasure having you guys. I wish you guys a great rest of the day and a great weekend.
Adios.
Ta-da.
Hello everyone, thank you so much for joining us once again. Today I have my wonderful co-worker Jack Carter with me from our affiliation department. Hello Jack.
Hello everybody, it's a pleasure to be here today.
Amazing, amazing. So Jack, today I want us to go through the Q&A regarding affiliation. So let's get started.
Let's go for it.
Amazing. So Jack, I want you to tell me what is an affiliate exactly and how does it work?
Now, basically, an affiliate is someone with an online presence, maybe a website or social media that could refer potential clients to our company to trade.
Okay.
That's essentially affiliate.
Amazing. Easy, right?
Very easy.
So the next question is, what kind of requirements do you need as an experienced affiliate and as an experienced affiliate to start?
Well, for an experienced affiliate, of course, they already have all the tools necessary. They have the website and obviously the online presence needed. But we have additional marketing tools for them, such as banners and landing pages, to assist them further in their course as an experienced affiliate. Now, for new affiliates coming in, we offer one-on-one guidance to help them to explain more about SEO, PPC, SEM campaigns, and just to basically assist them along their way and on their journey on becoming a better affiliate.
Okay, amazing. And now, I want to know, do you actually need experience in affiliated marketing or forex?
No, not necessarily. You don't need to be a professional to join our affiliate program or to become an affiliate at all. All you need to have is the medium to promote. Social media like Facebook, Instagram, even Telegram and WhatsApp, or a website. If you have this, then you can become an affiliate.
Okay, that's amazing. So you can literally start from scratch when it comes to affiliation. You don't necessarily need a website.
No, it can just be an Instagram page or a Telegram group, anything like that. If you just have an online presence at all, then you can start to become an affiliate.
All right. I mean, especially today when social media is so strong, I think that's a very good point. We have a lot of influencers that could actually become affiliates, right?
Of course, yes, exactly.
That's amazing. So let's say someone gets started as an affiliate. How does it work? How do they refer clients to us?
Very good question. So if you do have, let's say, for example, a website or a blog, you can access our marketing tools and you can choose various banners for various promotions that we offer or specific markets that we offer as well. And there are also specific links or landing pages that you could use to target your audience with for whatever they want to do or whatever they want to trade.
Okay, and a question that I think everyone wants to know is, how do they get paid? What kind of payouts do we offer?
That's also a good question. Now, we offer a large amount of commission plans. Okay, so we have the CPA payments, or the tiered CPA as well. First-time deposit commissions, hybrid plans, rebates, revenue share. We have a whole host of different plans that can be also integrated together for hybrid deals as well. We're just very flexible with these plans.
So perfect, Jack. I think we covered the most frequently asked question. Now I want to see your point of view. Like, is there something that you would say to potential affiliates out there that want to get started but they're not sure, and why should they get started with IronFX and not any other broker in the industry?
What I would say is, if you do have an online presence and you think you're capable of doing it, then don't hesitate. Give it a try. It might turn into something big for you. You know, because we offer the one-on-one guidance, competitive schemes, and a heap of marketing tools that can help you. We can help you go on the long run and become a successful affiliate. Because we're very flexible with the commissions as well, obviously this will give you a boost in your marketing. So here at IronFX, we're here to help you become more successful. Simple as that.
Amazing. And as I always say, we have these walkthroughs to help you guys. If you have any more questions, you can always contact our support team by emailing us, or you can chat with us on the live chat support. And thank you so much for tuning in. Thank you, Jack, for this extremely helpful walkthrough. I'm sure that this will help a lot of potential affiliates out there. And guys, don't forget to tune in tomorrow for our next live session at 12 p.m. Until then, I wish you a very good day. Bye-bye.
See you in a bit.